Welcome to this explainer. Look, if you've been checking your bank account recently and feeling this intense, compounding pressure, I want to stop you right there and say, you are not imagining it, you are definitely not alone. We are looking at an unprecedented set of economic hurdles right now. But, and here is the really good news we found diving into the source material, every single one of these challenges has a mathematical, actionable solution. Today, we're going to transform that panic into power. Let's get right into it. Here's our game plan. We'll be moving through 6 quick sections. Section 1, the 2026 financial squeeze. Section 2, surviving inflation and housing costs. Section 3 covers beating AI and consumer debt. Section 4 is retirement and financial education. Section 5, conquering mental financial stress. And finally, Section 6, your complete survival strategy. All right, let's kick things off with Section 1, the 2026 financial squeeze. So, 2026 is the hardest year to be middle class in American history. It's a bold claim, right? But the data absolutely backs it up. It might not look like some dramatic movie-style crash, but the sheer density of the financial pressure is off the charts. If you've been feeling the pinch, the source material totally validates that stress. It is absolutely not just in your head. And here's why. These aren't just random problems popping up out of nowhere. It's a chain reaction. Step 1, COVID money printing sparks inflation. Step 2, central banks aggressively hike rates to fight it, which totally locks up the housing market. Step 3, AI arrives at scale, displacing jobs. And Step 4, all this hits while wages stagnate and debt skyrockets. The middle class is literally getting squeezed from every possible direction, all at the exact same time. So, how do we fight back? Let's move to Section 2, surviving inflation and housing costs. Time to play some offense. First up, inflation. Your dollar is buying less every single month. Any cash sitting idle in a regular checking account is actively losing 3 to 4% of its value a year. The sources suggest building an inflation shield. That means moving your emergency fund to a high-yield savings account. You can snag 4.5 to 5% right now easily. For the rest of your money, you want assets that actually go up with inflation. We're talking real estate, commodities, dividend stocks in essential sectors, and Treasury inflation-protected securities, or TIPS. Basically, you want to make inflation work for you, not against you. Now let's talk about housing. $420,000. That is the median home price in 2026. The American dream of home ownership is hitting a massive break wall right now. Just look at this breakdown. A 7% mortgage on that median home, it devours a staggering 40% of your household income before taxes even hit. 40%! That leaves just 60% to cover literally every other expense in your life. It's crazy when you see it visually. Existing owners are trapped by their old, low rates, and new buyers are totally locked out by the new ones. The market is just frozen. But listen, you're not powerless here. The material gives us 3 clear paths around this freeze. Step 1 is the house hack. Buy a small multi-unit property, live in one, and rent the others out so tenants pay your mortgage. Step 2 is geographic arbitrage. If you have a remote job, take that high income to a cheaper market and instantly boost your buying power. Step 3, if buying is completely impossible right now, just rent, but aggressively invest the difference, what you would have spent on a mortgage, into index funds and REITs. You can absolutely still build wealth without owning a house while you wait for a better entry point. All right, on to Section 3, beating AI and consumer debt to protect your cash flow. Goldman Sachs estimates 300 million jobs are at risk globally from AI. Data entry, basic analysis, routine coding, those are on the chopping block. So how do you adapt? You pivot to what AI can't do, the uniquely human skills, genuine creativity, emotional intelligence, skilled physical trades, and true leadership. You don't want to compete with AI. You want to learn to use it as a tool to supercharge your own productivity. Then we have the wealth vampires, $17 trillion. That is the current American consumer debt. Credit cards are averaging 22%. Massive student loans are crushing people, and auto loans on depreciating cars are just draining critical monthly cash flow dry. The strategy to beat this is called the debt avalanche. It's a ruthless, purely mathematical approach. Step 1, list all your debts by interest rate, highest to lowest. Step 2, throw absolutely every extra penny at the highest rate. Step 3, pay only the bare minimums on everything else. Step 4, the moment that top debt is gone, roll its entire payment into the next highest one. It creates this massive snowball effect. Well, actually, avalanche effect. Unstoppable momentum. Check this out, because the math is wild. Killing a $500 monthly debt payment is mathematically the same as giving yourself a $7,500 annual raise after taxes.
Every point of interest you eliminate is a permanent boost to your real income. If you invest that money instead, it is an absolute game changer for your lifetime wealth.
Next up, Section 4, Retirement and Financial Education. Let's talk about building your foundation. The average American nearing retirement has less than $90,000 saved. With safe withdrawal rates, that $90K gives you $3,600 a year. That's exactly $300 a month. $300. That exposes a terrifying gap between what people need to survive and what they actually have.
The biggest weapon you have here is time. Time is literally the one variable you cannot get back. Look at these two scenarios. If you start investing just $100 a month at age 25, average returns get you to about $350,000 by 65. But if you wait until 45 to start that exact same $100 investment, you end up with just $75,000. Waiting 20 years costs you over $250,000. The data is screaming at us to start immediately. Max out the 401k match first, because that's literally free money, and automate everything.
A huge reason for this retirement gap is that our education system teaches us nothing about how money actually works. So you have to educate yourself. The experts say to read one financial book a month. Start with this specific progression. Dave Ramsey's The Total Money Makeover, Robert Kiyosaki's Rich Dad, Poor Dad, Thomas Stanley's The Millionaire Next Door, Morgan Housel's The Psychology of Money, and John Bogle's The Little Book of Common Sense Investing. These will fundamentally change how you view wealth.
All right, Section 5, Conquering Mental Financial Stress. Let's talk about breaking the doom loop. Financial stress is brutal. It's a leading cause of relationship breakdowns and severe anxiety. It becomes this self-reinforcing cycle. Stress forces you to make poor, reactive decisions, and those poor decisions just create more stress. How do you break out of it? You pick just one high-impact action to do this week. Don't try to fix everything today. Just move your emergency fund or write down your debts. That tiny bit of progress reduces stress, which makes your next decision even better. Let's pull this all together. Section 6, your complete survival strategy. Here is the master plan.
Check out this 5-year timeline. See how the momentum builds? Month 1, you move your cash to high-yield savings and start the debt avalanche. Month 6, your investments are automated and your housing strategy is in play. Year 1, that awful high-interest debt is completely gone. Year 3, all consumer debt is wiped out. Year 5, you've got multiple income streams active and you're laying the foundation for generational wealth. Solving one problem naturally makes the next one easier to tackle.
Look, before you think 2026 is just an impossible mountain to climb, remember history. Every single generation thought their crisis was uniquely unsurvivable. The 1930s saw 25% unemployment. The 1970s had crippling inflation. The 1980s had mortgage rates hitting 18%. People survived all of them. And the ones who built lasting wealth during those eras were the ones who studied the challenges, understood the solutions, and executed them consistently. The pressure right now is real, but hard definitely does not mean impossible. The winners are going to be the ones who take action. You have the map now, you understand the compounding threats, and you have the specific solutions from our sources to beat every single one of them. So the final question you have to ask yourself is this: will you choose education over ignorance and strategy over hope? What is the one action you're going to take today to start building your fortress?